Concept number 3. In the problem, OPSR and new partner profit sharing ratio are given. And new partner bring the cash for goodwill. And full goodwill amount is withdrawn by the sacrificed old partners. I am explaining the situation. Which type of question is it? First step, relating to profit sharing ratio, two informations are available. One is OPSR, another one is new partner profit sharing ratio. And relating to goodwill, new partner bring the cash for goodwill and full goodwill amount is withdrawn by the sacrificed old partners. Start the question. Mr. A and Mr. B are partners in a firm. In this partnership firm, there are two old partners, Mr. A and Mr. B, sharing profits and losses in the ratio of 3:2. What is the OPSR? 3:2. Their balance sheet as on 31st/3/2024 was as follow. It is the old balance sheet date. Balance sheet of Messrs. Mr. A and Mr. B as on 31st/3/2024. Capital and liabilities amount rupees. Right hand side assets amount rupees. Capital Mr. A, Mr. B. Cash or bank account in the asset side. On 1/4/2024, they admit Mr. C into the partnership on the following terms. This question is relating to admission of a partner. Who is a new partner? Mr. C. The date on which new partner is admitted into the partnership firm on 1/4/2024. Mr. C should bring in cash. See this. New partner bring the cash for goodwill as is capital and 15,000 for goodwill. Goodwill amount is withdrawn by the partners. Full goodwill amount is withdrawn by the partners. I think everybody understanding the question. Show the accounting treatment of goodwill as per AS26 by preparing partners capital account and cash or bank account. Pause the video. Write the question. Let us start solution. Solution to concept number 3. In case of admission of a partner, to give the accounting treatment of the goodwill, we have to calculate the sacrifice ratio. In order to calculate the sacrifice ratio, in this question, OPSR and new partner profit sharing ratio are given. In such a situation, sacrifice ratio is equals to OPSR. Sacrifice ratio is equals to Mr. A ratio Mr. B. Sacrifice ratio is equal to 3:2. Pause the video and write it. Working note number 2. Accounting treatment of goodwill as per AS26. Draw the journal entry format like this. Date particulars, LF, debit, rupees, credit, rupees. When the new partner bring the cash for goodwill, step 1 journal entry is cash or bank account debit rupees 15,000 to premium for goodwill account. Because cash or bank account is real account, debit what comes in. Premium for goodwill account is a nominal account credited incomes and gains. Or representative account, you can treat like that also. 15,000. Or you can take it as a personal account also, because this goodwill amount belongs to the old partners. Being cash brought in by Mr. C for a share of goodwill credited to premium for goodwill account. This is step number 1, and the new partner bring the cash for goodwill. Second step is compulsory. Premium for goodwill account debit, because we are closing the premium for goodwill account by transferring the amount from premium for goodwill account to sacrificed partners capital account. So earlier it was credited, now it should be debit to Mr. A's capital account. This is transfer entry. 15,000 into 3/5 sacrifice ratio 9,000. To Mr. B's capital account, 15,000 into 2/5. It is rupees 6,000. Being cash brought in by Mr. C credited to old partner's capital account in the sacrifice ratio of 3:2. Okay. So when the new partner bring the cash for goodwill, we have to follow the two steps. Step number 1 and step number 2. Now, if in the question goodwill amount is withdrawn by the sacrificed partner, step number 3 is required. Mr. A's capital account debit, personal account debit the issuer, 9,000. Mr. B's capital account debit, personal account debit the issuer, 6,000. This 9,000 is from here. This 6,000 is from here. To cash or bank account, real account credit what goes out? Amount 15,000. If you are following the American accounting system, Mr. A's capital account debit, decrease in the capital debit. Mr. B's capital account debit, decrease in the capital debit. To cash or bank account, asset account, decrease in the asset credit. Being full goodwill amount is withdrawn by sacrificed partners. Pause the video and write the answer. Now draw the partner's capital account, cash or bank account, and premium for goodwill account. Ready? When new partner bring the cash for goodwill, what is their entry? Cash or bank account debit to premium for goodwill account. Working note number 2, step number 1 entry, rupees 15,000. We have written in the cash or bank account on the debit side. Again we have to write in the premium for goodwill account. Premium for goodwill account is credited by cash or bank account. Amount 15,000. From this we have taken from the cash or bank account. This is step number 1. Step number 2 is to distribute this goodwill, means transfer from premium for goodwill account to Mr. A and Mr. B sacrificed partners capital account. Premium for goodwill account debit to Mr. A's capital account. 15,000 in 3 sacrifice ratio, 3:2, 3 by 5, 9,000. To Mr. B's capital account, 15,000 into 2 by 5 sacrifice ratio, 6,000. Now we have written on the debit side of the premium for goodwill account. Next we have to write on the partner's capital account credit side. Premium for Mr. A's capital account is credited by premium for goodwill account. Working note number 2, step number 2. Goodwill amount in the sacrifice ratio of 3:2. A 9,000. From this, from cash premium for goodwill account to capital account. B 6,000. From premium for goodwill account to B's capital account. You check it like this. Okay. Next, when this goodwill amount is withdrawn by the sacrificed partner, next entry is sacrificed partner's capital account debit to cash or bank account. Mr. A's capital account debit. So before that you close the premium for goodwill account. Take the total on the debit side, 15,000. Total on the credit side, 15,000. Now premium for goodwill account is closed. So it will not appear in the new balance sheet. Next, when goodwill amount is withdrawn by the partner, sacrificing partner capital account debit to cash or bank account. Mr. A's capital account debit to cash or bank account, full goodwill amount withdrawn. Working out number 2, step number 3, 9,000. We have taken this 9,000 and B's capital account 6,000. Okay. Now, there may be a question arise in your mind. Sir, from here you have taken this 9,000. This 9,000 here. 6,000 from this 6,000. Okay. Next, we have written on the debit side of the partner's capital account. In the cash or bank account, we have to write on the credit side. Cash or bank account is credited by, I have written 2 times by, you write only 1 times. It is typing mistake. By Mr. A's capital account, that is 4,500. How? 9. So you write it as a 9,000 because it is not a 4,500. I want to check it, change it. it is a 9,000. Okay. Full goodwill amount 6,000. Okay. Let us start. By Mr. Right, only one time. By Mr. A's capital account 9,000. By Mr. B's capital account 6,000. From where I have taken? From the A's capital account to bank. From B's capital account to bank. Okay. I think everybody understanding it. If you are not understanding, repeat it. You watch it repeatedly. And if it is useful to you, and if you are understanding it, like it, subscribe it, and share it to your friends also. If you have any doubt, write in the comment box.